Welcome back to another episode. Today, we're definitely having a red day in the overall tech market, and we're definitely feeling it here in the semiconductor space. So I actually want to take a closer look at 5 AI semiconductor companies that I think you should keep a closer eye right now while the stocks are dropping. So let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the first company should be a no-brainer. This is going to be Nvidia. Right now, the stock is sitting at $117 as I am recording. The stock is down roughly 4% on the day, but we can see from its year-to-date high, the stock is down closer to 13%. So I want to take a closer look at some of the bullish reasons to be excited about Nvidia, and I just want to say one word: Blackwell. So for those that are not familiar, Blackwell is the next architecture for Nvidia's AI chips, and it's one that I believe is going to be a very, very bullish sentiment for the stock. I mean, even Jensen, the CEO of Nvidia, believes that this is going to be their revolutionary product. And he doesn't mention this on every product. He believes this is not only going to be a revolutionary product for the company Nvidia, but it is going to be a product that's going to change technology as a whole. And if you've been watching my channel, you know I'm big in Nvidia, and we look at it on a daily basis. We do know that the demand for Blackwell is very, very high. So Nvidia's Blackwell platform, in my opinion, is the main reason to be bullish in this stock, as this company continues to lead the AI space. And after the Blackwell, they're going to have their next generation, the Rubin. So Nvidia is definitely on the fast track of AI here. If we take a closer look at valuations based on current estimates, we can see PE ratio forward 1 year, which is pretty much the end of 2025. So about a year and 6 months from now, is 31.4. This is what many might consider cheap for a fast-growing stock. I do want to say, based on the numbers that we are looking here from analyst expectations, especially those that are very bullish, the current PE ratio forward 1 year based on those bullish numbers is actually closer to 25. So Nvidia is definitely one to take a closer look at, but like any investment, all these companies have risks. So while there is the bullish case, there's also a bearish scenario. And before we go any further and look at the other stocks, I do want to say thank you for all the support that you guys have shown for my ebooks. So I have 2 ebooks: the Investor Semiconductor Handbook, which is kind of sort of an encyclopedia of over 50 plus semiconductor companies. Then I also have an Investor's Earning Insight for this quarter's earnings, and both are public right now. You can go purchase them. The great thing is both these books are what I call living documents, so I'm updating them whenever we add a new company or whenever a new earnings comes out. So make sure to check those books out. A lot more information can be found on moresemiinvesting.com. The great thing, if you do purchase both these books at the same time, you do get an automatic discount of $20 off. So thank you so much for the support. Now, stock number 2, I have to say, is AMD. I believe AMD at 150 is an attractive level. So right now we're sitting at $148 pretty much, rough or take. So why should one be bullish on AMD? So first, it's just the continued rise of AI PC in the consumer market, kind of leading more PC sales in general. So AMD has their own CPU, their own GPU, and their own NPU that really can grow in this PC market, for the client market, for the consumer market, and for the business market. Outside of that, and AMD also has an AI accelerator that is good for things like machine learning, inferencing, training, and that is their MI300. These, I mentioned that before, I don't believe AMD is the next Nvidia, but I do believe they can benefit financially from the growth of AI, and their MI300 and their upcoming generations are also going to do pretty well, in my opinion, to kind of grow the company overall. So I believe those are the 2 main reasons to be bullish on AMD right now. Like I mentioned, all these companies have risk, so it's not necessarily a guaranteed winner, but it's one that I do enjoy. So if we look at AMD's PE ratio for 1 year, is currently sitting at 27.11. This is another one where I believe analysts are underestimating how much earnings per share it can make in the next fiscal year, and I think this is actually closer to the low 20s and the mid 20s, maybe below 25 right now. So AMD is another one that I personally find nice at these levels. Before we move on to the next company, I forgot to look at kind of its 52-week high from its 52-week high. Year-to-date high as well. AMD is down nearly 30% at these levels, so definitely has seen quite a haircut. Now, company number 3 is going to be Intel Corporation. Definitely one that doesn't get a lot of love. I personally believe there's a lot of growth potential here, but it's growth potential that's going to take multiple years to really grow over time. We can see the stock year to date is down roughly 32.5%, and from its year to date high, the stock is down closer to 35%. So it's one of those few semiconductors that unfortunately is down on the year. So why would one be bullish on Intel? First thing, very similar to some of these other players, they are in the AI accelerator space with their Gaudi 3, and they are developing new chips for this market as well. While Intel, in my opinion, is probably the least competitive in forms of supply chain right now, it's definitely one that shouldn't be overlooked. Again, very similar to AMD, I don't believe Intel will be the next Nvidia because of their AI accelerators, but I do believe financially it can benefit from its AI chips. Outside of that, very similar to AMD, it's also in the AI PC race for the consumer market, for the client market, for the business market, and they do have, very similar to AMD, their own CPU, their own GPU, and their own NPU as well. Now, the real reason I want to say to be bullish in Intel is their manufacturing. Intel is getting tons and tons of money from subsidies, governments all over the world, in Europe, here in the United States, to build a manufacturing push. And right now, people want to diversify a little bit from Taiwan. So Intel can definitely benefit from this growth in manufacturing. Within manufacturing, there's also a special niche called advanced packaging, which is how you put chips together. And Intel also seems to be a strong player here with a lot of their advanced packaging. And to create a lot of these new AI chips, to create some more of these advanced chips that we're seeing right now, advanced packaging is going to be key. And we can see here that Intel definitely has a strong play in this market, which I believe can see more growth opportunities for Intel. Now, Intel right now, forward 1 year's PE ratio is 16.82. This is the market pretty much saying, hey, look, this is cheap. But like I mentioned, the reason it is cheap is because the growth opportunities are opportunities that, while they are there, are going to time for it. It's going to take time for us to really see the results. So the market is considering that a higher risk maybe to some of the other players. But regardless, all those growth opportunities, if handled correctly, can make Intel a strong winner. Now, stock number 4. And I actually said 5 at the beginning of this episode, but there's actually 6 stocks. So Marvell Technology, ticker MRVL, right now sitting at $65.75. Year to date, the stock is up roughly 13%. And from its year to date high, the stock is down nearly 23%. So the reason to be bullish on Marvell is Marvell creates custom ASICs. So this is when those big tech giants kind of develop their own AI chip solutions. They work with Marvell or the next company we're going to see, Broadcom. So this is a huge growth opportunity as we continue to see big tech kind of move out of maybe their dependency of Nvidia, if that's what they're really trying to do. But they are seeing big tech kind of building their own AI chips. I mean, Google has the TPUs, Microsoft has the Maya, Meta has their own chip, Amazon has their own chips, and all these big cloud data centers have their own chips. So Marvell can definitely benefit from this. Outside of this, Marvell also provides a lot of networking solutions for the data center market, while these other markets like the automotive, the enterprise, the telecom are seeing a bit of a weakness, and that's why revenue is down. Eventually, these markets should pick back up, which should give a nice boost in revenue for Marvell. Now, Marvell's forward 1 year PE ratio is 27.26. Again, very bullish, nothing too expensive in my opinion, especially for a company that can benefit in the AI space. Now, we're going to take a closer look at Broadcom, stock number 5. So Broadcom is down roughly 5.6% today. Year to date, from its year to date high, the stock is down roughly 15%. This is one that has gotten a lot of excitement from the AI space. Very similar to Marvell, this also builds custom silicon for these big AI cloud players. These are the ones that are actually helping Google build their TPU based on reports. Other things to be excited is Broadcom and Marvell pretty much fight for the same market. Broadcom is just a way bigger beast, and they have a lot of networking solutions for various industries like the data center space. The one thing that also Broadcom has over competition is they do have VMware that they just recently acquired, and this kind of brings them into the cloud and software solution market. So Broadcom is definitely an interesting play right now, and we can see forward 1 year PE ratio is 25.74, nothing too crazy here. Now, the final stock that we're going to look at is Micron Technology, ticker MU. The stock is down roughly 2.5%. From its year-to-date high, the stock is down roughly 27%. So the reason to be bullish on Micron, especially in the AI space, is they are a provider of what is called HBM memory, which is high bandwidth memory, which is used for a lot of AI chips. Pretty much Nvidia's chips are using HBM from HBM2, HBM3E, and the future HBM4 and custom solutions of HBM that we're going to see. Micron is a top player in this space, and they're focusing on growing their capacity. So if we are selling more AI chips, Micron can definitely benefit. Outside of that, Micron also provides memory solutions for vast markets from the consumer space, like client PC. From all these other companies, we heard about the AI PC market going well. The automotive market eventually will pick up. The mobile market is expected to see some growth in the upcoming year. So Micron definitely has a nice amount of tailwinds behind it. Now, if we look at forward 1 year, PE ratio for Micron is sitting at 11.71. Micron companies, the memory market tends to be very cyclical, in my opinion, the most cyclical out of all these semiconductor stocks. And it's definitely one to watch out, but there's definitely a lot of growth opportunities. So like I mentioned, today I really wanted to just look at the bullish cases on these 6 stocks, and especially in the AI space, but that doesn't necessarily mean that they're a buy at these levels. It's ones you guys should continue to do more research on, but these are, in my opinion, some of the top contenders that should definitely make the watch list. So take care, have a good day, and make sure to check out my ebook. The link is down below. Peace out.